Thank you very much. We're now joined by Tara Sinclair, economist and professor at George Washington University here in Washington, D.C. Thank you very much for joining us on Biz Asia America. There's two things that happened today. We had the GDP figures slipping 0.1%. We also had the Fed statement. We'll try to combine both of these topics into one here. Is the number 0.1% significant?
It's really not significant. It was dramatic. It was well below forecasters' expectations. But if we look at the whole year, we grew at 2.2%, and that's a reasonable number for a reasonable average year. Now, this wasn't an average year. We were hoping for a boom recovery after such a long recession, but it's not a big deal to have just a 0.1% decline in one quarter.
Is it me, or does it feel like a repeat the last couple of years? We start January and February worried about all these things, and then by the second and third and fourth quarters, things become a little bit better than at least some of the skeptics thought. Is this year going to be that way as well?
Well, people are still predicting another year of sluggish growth in the economy. But this number was particularly an outlier relative to what we were seeing in all the other economic numbers. And it's a very preliminary number. So when we look at all the other economic indicators that seem to suggest the economy was doing reasonably well in the fourth quarter, that gives us some indication that maybe this number is going to be changed later on.
So I suspecting you're saying to the upside.
Exactly.
So a little surprise on the GDP figure. Not much surprise, however, on the FOMC statement, which is what the Federal Reserve gives guidance to institutional and retail investors, and for that matter, the rest of the world, when they talk about the U.S. economy. No real changes in the policy statement overall, but that also begs the question is, how much longer can they continue these asset purchases, or some would call it the printing of money?
Well, I think there's two aspects to it. There's the question of how long they're going to continue to buy these mortgage-backed securities and these longer-term treasury securities, and then how long are they going to keep interest rates so incredibly low. And it looks like what they're planning to do is do more security purchases for reasonable length of time, but then they're going to keep interest rates low for an incredibly long time.
Everyone talks about the economy. It's either the consumers who spend the money, which is 70% of the economy, or it's businesses or the government. Let's talk about businesses and the consumers. That's a big part of it. Confident, but not that confident. Is that an area that you're looking at closely?
Right. Well, and what we're really seeing is there's still a lot of uncertainty, both for consumers and for businesses, as to what their tax bills are going to look like over the next few years, what government spending is going to do, how much demand is there going to be for products that are produced for the government, and that money then trickles down into consumers' pockets, and they don't know how much they're going to have that way either.
And then you look at the other outliers of the economy overall. What is your number one concern when you look at 2013?
My number one concern is definitely what's going on with government plans for both taxes and spending. We just don't know what they're doing, and that uncertainty is really crushing the economy.
You want certainty.
I want certainty.
Tara Sinclair, thank you so much for joining us on Biz Asia America.